What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is July 21st of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to talk about the current state of the market, not just from a price action standard, but also taking a look at the fundamentals. I think it's very important to try to take a step back from time to time, and no matter where we stand on the aisle when it comes towards our positions and where we believe the market is heading, to look at the structural fundamentals, try to look at the data and see what we can find in order to determine whether or not the market is trending upwards or downwards. We've got a lot of things to dive into in today's video. If you guys happen to enjoy this video, consider dropping a like. It's one of the greatest ways you can support the channel. And let's go ahead and kick off the rambling. All right, I want to go ahead here and talk a little bit about price and then also dive into that fundamental reality here, because at the moment we are still facing resistance here, albeit holding up stronger than we did last time at the same range we were at in April. We're in the 30 to 32K range for Bitcoin. This is, again, a very important, significant price range that we're going to be watching here, which played huge significance back in 2021 and 2022, and is now looking like it is playing out as resistance. I think we can all agree by now that the ultimate narrative here, the Bitcoin spot ETF from BlackRock and a slew of other financial entities, are what what everyone's watching at the moment. That's the key topic that everyone's trying to discuss right now and ask whether or not the SEC is going to approve those. You guys know, as I've talked here on the channel, we have a pretty kind of negative view on this, but again, I want to save that subject for another time. There's a lot of people telling you that the ETF is just guaranteed to get passed and it's going to be this absolute major catalyst for Bitcoin, but time will tell here. Our key goal is to see how Bitcoin reacts with this price range. If we clear through above that range and actually get a close, that could be where we start to get some exciting price action. If we don't, on the other hand, and we cannot clear through here irrespective of ETF news, then this is likely going to mean that Bitcoin's going to come down and give us a new third lower low comparative to the one here in June and here in October. Now, I want to go ahead and talk a little bit about what's going on in the altcoin space here, because out of all the cryptocurrencies out there, one of the ones that has stood out that looks at least more bullish to me is the price pattern of Ethereum. Over the last more than a year, it has been building an ascending triangle. This is a bullish pattern where you have a flat range of resistance, ascending lows that line up here, squeezing in and coiling in price, usually to bounce to the upside. However, I want to make it clear that there's no guarantee of that. As with all technical patterns here, we're just simply working with what we have. But I'll say, if I see something that looks bullish, I'm going to say it. Generally speaking, ETH has held up strong here, and that is likely due towards a lot of the upgrades that Ethereum has implemented over the past year or two, such as the move to proof of stake, which lowered the inflation rate of Ethereum. But on top of that, EIP 1559, which burns ETH with each and every transaction on the network, whether you're sending ETH or you're engaging in DeFi activities. Doesn't matter. All of these things can help contribute to the supply schedule for Ethereum, or the inflation rate for the currency. Now, as the network is used more, EIP 1559 is an even more beneficial factor. But this is what we've got to talk about here, because while a lot of people think that these things guarantee that ETH just has to go up, that people are more likely to stake ETH than sell it, and it's just going to continue accelerating higher past new all-time highs in the next year or so, we've got to come back to reality. We not only need to ask ourselves the important question of whether or not sentiment is there, right? Not just from a price action perspective, but also from a fundamentals perspective. We're going to dive into that slowly. I'm going to transition here slowly from price towards those fundamental metrics, because right now, if we're just talking about pure sentiment, altcoins are not really showing up to the plate here. We've had our target here that sometime by the close of this year, somewhere from here in the summer, down here towards the close of the year, we're probably going to set in a third low for altcoins, coming down here towards this $140–150 billion range. That's kind of our more conservative target. It could get worse than that if broad global sentiment gets even worse. But generally speaking here, even with the news with XRP, that was supposedly a huge win for the crypto space, altcoins really aren't getting a major bid. They're not really rallying higher. Our monthly momentum indicator, for example, has still remained red for multiple months, I think coming up on a year now for altcoins. So whereas Bitcoin might have gotten a slight blue flip here on this past month, as we were going from the month of June to July, it is important to note here that altcoins are not showing that same trajectory. And that's relatively understandable. Bitcoin usually leads first. So I'm going to again be kind of passive here on the price analysis. Perhaps I'm being too bearish on that front. Let's go ahead though and talk about the fundamentals, because fundamentals do matter to a large extent. And when I say fundamentals, I mean the fundamental signs that showcase that there are more users and more adoption of these networks, because they generally go hand in hand with market cycles. With increases in liquidity and new participants, that is usually a sign of optimism. So if altcoins are just set to rally here over the next couple weeks, surely we should at least be seeing that these networks are holding neutral at a minimum rather than going down. Well, one of the great ways we can do this is analyzing stablecoin liquidity. Right? I know some people will disagree with me here. I know that there's been a fair argument some people have made that, Nick, you can't just look at stablecoin liquidity to determine whether or not Bitcoin can justify going up, because some people might buy Bitcoin or other altcoins, in this case, their USD. And there's a fair point to be made there. But when it comes to the adoption of DeFi applications, the real fundamental use of these networks that are going to drive long-term cyclical growth in these assets, you need to see increased usage of these networks. Because if you don't, the on-chain metrics are out in the public. We can't hide these things. And essentially speaking, if we take a look at all these different networks, whether it be large networks like Binance, Smart Chain, or Optimism, or Arbitrum, or Polygon, we are finding a grim trend. Now you guys can use this website. It's called DeFi Llama. It's a public free website to use, and it's probably one of the best at getting a visualization of on-chain metrics across a whole range of different layer 1 and layer 2 networks. Now, the important reason why I selected all these 4 networks is because not only are they some of the biggest L1 and L2 plays, or layer 1 or layer 2 networks out there in the crypto space, but most importantly, they are EVM compatible. They are the scaling solutions for users on the Ethereum network who can't afford to pay the network fees. It is a great measurement of the retail crowd, as well as some institutional players who are doing a lot of excess, fast-moving activity in the DeFi space and don't want to pay $40 per transaction. Right? So let's go ahead and take a look at these metrics here. And the metric I'm looking at is the value of stablecoins on the network. Now, what's great about this is that unlike looking at, the total TVL of the market, which really is determined by the token's price because all of the existing coin supply is on the network by default, we can see with stablecoins real hard cash and whether or not it's growing or declining on any specific network. If we take a look here at the metrics on Binance Smart Chain, the largest network here, which by the way, mind you, is worth $37 billion by its current market cap. If we take a look at its fundamental TVL, or the actual stablecoins that are locked onto the network, we essentially only have about $5.3 billion worth of stablecoins on the network. Now, there's not even a rule here that if you have $5 billion worth of stablecoins, the network should be worth $5 billion, right? That would be quite generous here. We should expect that stablecoin liquidity, from a fundamentals perspective, would be far beyond the market cap of these crypto assets. Unfortunately, it's the entire other side of the coin here. We have got a fraction of existing market cap and the value of stablecoins on the network, and that is down roughly from a peak of 13 billion in June of 2022 all the way down now towards 5.3 billion in July of 2023. Nearly a year later, we have cut that value more than in half of its original peak value, well below the general range we were in during the overall bull market in 2021. This is a sign that Binance Smart Chain is struggling to grow. In fact, it is decaying from its prior growth metrics. It is showcasing that either there is something structurally wrong with Binance Smart Chain that is preventing users from using it, or there are no killer applications, or there are too many hacks going on the network. I could name off a dozen reasons why Binance Smart Chain is not growing, but the biggest one here we're going to talk about as we go through the video is not just an issue with Binance Smart Chain, but with a whole range of other layer 1 and layer 2 networks that are EVM compatible, meaning that they are compatible with the smart contracts or decentralized applications you deploy on the Ethereum network. Let's take a look at Optimism here, right? Optimism, no pun intended, has been a little bit more optimistic than some of the other plays, but still, it topped out its values in stablecoin market cap, right? The amount of stablecoins in the network, roughly around right under $800 million back in August and October of 2022. Since then, while there have been some waves of recovery back up, there have been many waves of decline, and we have still not seen a new high in this valuation for Optimism's total value locked when it comes to stablecoins. And again, this is a huge worrying sign here, because we should be seeing that these plays are showing signs of growth. We should fundamentally be seeing these plays have stablecoin liquidity that far outweighs their market cap, right? Not to mention, we should be seeing a growing trajectory. The fundamentals lead first, guys. I can tell you this firsthand. When we were building in the DeFi space back in 2019, when we were investing heavy in 2019 and 2020 in a whole range of DeFi plays that no one wanted to touch at the time because sentiment was just too low in altcoins, that we made some pretty solid returns on, those were built because we saw the fundamentals growing when no one was watching, right? And again, let's take a look here at some of these other ones, right? Arbitrum. Arbitrum is one of the few ones that has been expanding its stablecoin liquidity, say since that last period of time, by about $700 million. So definitely a nice growth story here, but it has been declining steadily here since back in April. Has something fundamentally changed here that's removed over $250 million of liquidity and is not allowing Arbitrum to really see growth here? If Arbitrum fails here, we've got a big issue. Right? Now, I want to go ahead and talk about one of the big favorites here because it is one of the largest by market cap, and that is Polygon. Take a look at Polygon here, guys. Polygon was the leader in L2 solutions back in 2021, right? And nothing fundamentally changed here. In fact, Polygon's been trying to make some investments into ZK rollups and different types of scaling solutions and improvements to the network. However, at the end of the day, it's an EVM fork. It is a fork of the Ethereum network. It is implementing the same exact technology with nothing too breakthrough. And unfortunately, since that period of time, stablecoin liquidity in the network has been cut in half, from around $3 billion to less than $1.4 billion. And I'll guarantee you that the amount of daily users or real people engaging in the Polygon network are much lower than back in 2021. Now, I know some of you will say, well, Nick, of course, it's bear market. Why are you being so harsh, right? Can't you cut them some slack? No, I'm not going to cut people slack on this, because at the end of the day, if we are not seeing the fundamental numbers moving up, if we are not seeing on-chain metrics signaling that there is more adoption here, we are being sold hotcakes. We are being sold a lie that it's time to go all in on these networks, that they're huge growth plays, that they should be, it's okay that many of these plays are trading at multi-billion-dollar valuations. That's the narrative we've been sold. It's just gonna be good again, just like it always has been, right? But the question we gotta ask ourselves is, where's the liquidity? Where are the applications? Where are the users? And this brings me back to a fundamental point I want to make here, guys. It's not just that sentiment is shot here in the market. There is a reason why all of these chains, especially the big ones like Polygon and BSC, unfortunately are seeing a decline in their TVL. And unfortunately, why some of the smaller plays like Arbitrum are not going to be enough to make up for the decline here in these networks. Arbitrum falls at the same faults as all of these networks. And it's the same faults that unfortunately corrupt and unfortunately decay networks like Ethereum that had so much potential being the first runner in the market. The reason is because these networks, all being EVM compatible and being built in Solidity, they suffer from the same exact issues. Constant hacks and smart contract exploits, consistent scams on the market, and right now a clear lack, whether it be a lack of motivation or a lack of ideas or a lack of ability to build on these networks, a lack of innovation. That, to me, is probably the biggest issue. The lack of innovation in DeFi, the lack of excitement. What new applications have come out in the last year, guys? I'm sorry if I sound like I'm beating a dead horse and being too negative, but I'm someone who I will sink my teeth in anything, whether it's a white paper or an application that has to do with DeFi. I'm excited about DeFi as a use case, but I can't find one single application other than repeated copycats like PancakeSwap, which is, again, basically Uniswap on the Binance Smart Chain. We take a look at Optimism as well, right? Velodrome, which again is just a DEX, and then repeated things that were already on the Ethereum network like Synthetics or Aave. Arbitrum as well, GMX, which is just derivatives, right? Leverage trading, and then Uniswap, and then just going down, the same thing, Aave and Radiant here, which are lending protocols. Polygon as well. Again, QuickSwap, Uniswap fork, then Uniswap v3, and Aave as well. It's just the same stuff. Rinse and repeat, nothing new, nothing exciting, nothing gaining major TVL that really gets me amped up and says, that justifies people engaging in DeFi. Guys, I gotta be real with you here. There's a lot of people telling you the optimistic thing, and to be honest, I'm generally someone who's optimistic in the long term. I know it may not feel like that, but your real friends are gonna be honest with you. The people who are looking out for you are going to tell you the blunt truth, and they're going to show you the data to back it up, and they're going to take the time to let you know why you need to be concerned about these things. I'm here to let you guys know that the fundamentals aren't lying right now. They are not painting a pretty picture, and there's a good reason for this. It's because, unfortunately, while all these networks are trying to solve the issue of scalability and high fees, that is just one part of the equation. Right? Lowering fees is definitely a good thing, but if you don't fix the flawed underlying system, which is being EVM compatible or having a chain where if you get exploited, right, then you're going to be essentially, hacked and people could lose tons of funds. Those users are never coming back, and that is a huge hit on growth. It's a huge hit on any project who wants to build innovative solutions. Now, I want to spend some time here, though, to talk about one network here, one of our long-term partners here on the channel, and that is Radix. Now, if you guys have not dove into Radix yet, I'm not just here promoting Radix because there's some sponsor on the channel. I've been following Radix for a long time. I've known Pierce and the team who've been working behind this project for a long period of time, and this is one of the few layer ones that I think you guys need to be keeping on your radar. It is one of the few, kind of Hail Marys, saving graces for this crypto space that potentially could fix all these issues, because it's not just another EVM fork. And it's okay if you have an EVM fork, right? There's good reason, I guess, at the end of the day, to have exposure to being an EVM chain. I can see that, but you need to have the security layer, networks like Energy, which we talk about here on the channel, right? Those networks are at least accounting for safety and security and making things right for users, giving you that sandbox to make mistakes. But Radix is taking a different approach from all these other EVM chains. The goal it has is to do something bold, to work multiple years on delivering a vision that fixes not only the issues for developers when building applications, the security concerns, but outside of this, while improving the user experience. So I want to run through a really great page here that we've referenced before. This is the Radix full stack page for DeFi that they have on their website, where they essentially talk about how they're improving the user experience, the developer experience, and scalability. Now, I won't be able to dive into all of it in immense detail, but I wanted to go through some of it today to give you guys a brief primer. And if you guys want to find it, just head over to Radix's website, go to the Learn section, and click on Full Stack. So let's go ahead, and I'll leave it down below in the description if you guys want to check it out. But let's go ahead and dive into it. First off, I want to talk about the Radix wallet, and more specifically, the user experience features that are offered within various wallets for the Radix network that will be available for those participating on the network. You guys probably know the experience in interacting with crypto wallets through MetaMask. MetaMask is the biggest crypto wallet, and it has, not to no surprise, it has a lot of major issues. You have things, for example, like when you're signing transactions, you simply just don't know what you're engaging in. You get some spread of hexadecimal code, and you have to hope that you're interacting with the right Uniswap or Compound smart contract, or minting an NFT on a genuine platform that's totally not going to be asking for permission to access all of your assets. Unfortunately, when you sign on any type of transaction on an EVM chain, you are hoping and praying that you're signing the right transaction. Well, in the case of the Radix network, they have what's known as transaction manifest. A simple way to put it is human readable transactions. Transactions that let you know that, hey, I'm, for example, I'm exchanging these tokens for another pair of tokens through some kind of liquidity pool on an equivalent of Uniswap, right? Essentially, if I'm going through, I'm trading here from one asset to another, and I'm going to give up this asset in exchange for another. And here are the permissions that I'm giving up here by interacting with this application. Or really, at the end of the day, giving you a clean-cut, dry representation of what you're doing. This is so imperative to avoid hacks of your wallet, things that just unfortunately shouldn't be happening in the crypto space nearly a decade into our journey as a crypto industry, but still happen on a routine basis, right? And these are the things that unfortunately Ethereum and other EVM chains can't just fix overnight. They are due to technical flaws or unfortunate lags in the actual core network that Radix specifically asked developers and users what they were struggling with and built from the ground up. Ethereum can't just implement some network upgrade to fix these things. It takes tons of time, and you're building it on top of a foundation that's already launched out there in the market. Whereas Radix here has been taking a slow and steady approach towards building a network that will last for the next decade or more to come, without the need to make any excessive upgrades to be the network that is going to lead the way forward for DeFi to become a $1 trillion plus industry. Another thing as well is smart accounts. So instead of having seed phrases or just kind of random hashed accounts generated like you would have on MetaMask, you can actually have smart accounts that have identity to them that can allow you to use them as kind of your central hub. And more specifically, the feature of smart accounts utilizes something that's known as wallet recovery. Now, this is something that I'm very big about, or basically smart contract accounts. This is something that you can build in the Ethereum network, but is incredibly cumbersome to do so and requires that you run and maintain your own infrastructure to do so. I was someone who was very early in this technology, adopting it and even using it for my own prior wallet start. And I gotta tell you guys, it is a pain to run this on the Ethereum network, but if you can offer this as a core part of the network when creating wallets or generating a wallet for yourself, it is a huge feature, not having to remember seed phrases when you wanna have a self-custodial wallet. Not having to rely on some centralized custodian to manage your account, being able to be decentralized, but have the convenience of using your smartphone to recover in and access your account, just like you would with email or anything else. It should be as secure as email or anything that you use that has to do with your data, your privacy, and most importantly, your money. Right? So this is a very important thing here. Now, these are just some of the UX improvements here that they're adding in towards there. They also have things like built-in native meta transactions. Again, something you could do on the Ethereum network that takes a lot of work to do so. You have to build all this infrastructure. It just adds more weight for developers, more stuff you need to maintain, and more potential opportunities to have exploits. So if you are interested in seeing how Radix is building all this stuff from the ground up inside the core network into the user experience as a native part of it, I definitely recommend you guys read into some of the other additional things that they're going to be adding. It is a huge overhaul on the experience. And even just from these graphics, you can probably see just how much this is improving the experience. Now, I want to go ahead and again, as we scroll through here, talk a little bit about Scripto. If you know about Radix, you've got to know about Scripto. Scripto is the native programming language as an alternative to, say, Solidity to the EVM compatible networks. Scripto is essentially the native programming language built in the framework of Rust that allows you to build really exciting applications with much less code and much less concern for security exploits. Essentially speaking, the equivalent application of Uniswap v2, which was the leading decentralized exchange in the DeFi sector, which took thousands of lines of code to write, could be written in as less as 200 lines of code in Scripto. That is a huge leap forward, not only for developer time in order to build these applications that offer the exact same functionality of storing liquidity, trading from one asset to another, but on top of that, it gives you a ton of safety when it comes to the developer experience, when it comes to audits, having to make sure that your code is sound and that there are no room for exploits in those contracts. The way that Scripto has been built here is an asset-oriented language, which makes it incredibly simple to develop applications that secure assets and make sure that there are very limited, clear functions about what those assets can do and what kind of transactions you can engage with those smart contracts. There are currently, right now, over 12,000 plus developers who are building within the Radix ecosystem. They're continuing to build smart contracts, or more specifically, blueprints with in this case, Scripto, the native programming language. And it's really exciting to see what people have put out. They've not only built some of the DeFi primitives, they've built the equivalents of Uniswap, they've built the Compound or Aves of the network, but some people are building some really exciting stuff. And I think we're just seeing the beginning here of what's going to be possible here with Scripto as the team adds more functionality to the language and continues to add more ways you can build within Scripto. there is going to be more than just the 50 projects that are being built right now within the ecosystem. I think you're going to see a lot of innovative plays that just couldn't be built in the Ethereum ecosystem because you have so much unknown unknowns. Essentially, if you wanted to build something innovative within the DeFi ecosystem for Radix, you're working with a framework here that is not only much more simple, but if you wanted to do so on the Ethereum network, what you have to worry about is if you're starting from the ground up and building something truly innovative, you're not just forking off existing code, you really have to worry about, basically any kind of exploit that could happen. If you have one line of code wrong, even if you get all these audits, you're doing something new. If someone is creative enough to exploit it, then essentially you're going to have a potential risk of losing all user funds or a portion of user funds. That's why Scripto is so innovative here that they've built a dramatically simplified and secure language that is going to fix those issues. Now, there are a whole range of other topics here, like Cerberus, that helps with consensus, but I want to keep it relatively brief here, guys. I want to leave the link down below in the description where you guys can dive into this material for yourself, learn about Radix. Don't sleep on this one. Keep it on your radar at a minimum, guys. And as we continue to see this correction in the market, Radix is one of the few plays I'm going to be watching for here. So again, definitely check it out, do some research. But as we go towards this topic here, guys, not only are altcoins at the moment here looking like they're ready for a continued pullback, right? We're doing our due diligence. We're trying to find the projects we're interested in. But at the same time, I got to be honest with you guys, I do see the market continuing to correct here. And we are basically trying to determine, now that Binance or BNB has broken through this long-term trend line that it held since 2017, how low can things go? Can it hold here at around $30 billion? Because if it can't, if it breaks through that level, we are entering into no man's land. And it's coming at a time here where global equities, which again in the case of the NASDAQ, rose 43% off of the exact lows in October 2022, right? Huge recovery here, no doubt. Just had its worst day of 2% to the downside since back here in March. So we've got to ask ourselves here whether or not equities are going to continue climbing higher if we're really in a new bull market. And if the fundamentals aren't there for a new bull market, man, if equities start correcting, it is going to spell really bad news for altcoins. Now, again, want to talk here a little bit about the AI narrative here. As you guys might have possibly seen in our prior video, we talked about the fact that ChatGPT saw 200 million less visits last month versus the prior month. Like from May to June, 200 million less visits. How bad is it here in July when we get those numbers? That was after a month where it was already stagnant growth. So we are now seeing decay in adoption. And even if you account for, Google's Bard, Apple is now launching their own language learning model, coming a little bit late to the party here. Essentially speaking, all these plays right now are generally seeing an overall negative growth cycle already, right? If we would have seen this with smartphones or the personal computer, equities would have corrected overnight, right? So again, this is what I think we're starting to see here. I think the market's kind of realizing, wow, we've really pushed NVIDIA all the way up to $455 a share, or roughly speaking, a price to earnings ratio of 244. Yikes. That is beyond absurd. In this kind of macro environment, with the lack of real fundamentals, well, we are going to have earnings later on in August, and we're going to see if NVIDIA really was able to fill the order flow that they claimed that they're going to sell, right? Again, that big breakout, that huge move here was based off of future promises that in the next quarter, they were going to blow out sales. They revised their quarterly estimates of 7 billion revenue to 11 billion. So we're going to have to see if that really plays out. Is generative AI really in demand right now? Because chip sales from TSMC, the major manufacturer for chips, it's expecting 10% negative year-over-year growth. It is expecting one of its first major down quarters in years. And sure, maybe TSMC is not the full picture. Perhaps we're missing something. But if ChatGPT is seeing negative growth, and the broader language learning model space is seeing negative growth for the first time, how can there be growing demand for GPUs, right? It's not something that as time progresses, really these GPUs, right? No, they last for a long time. This infrastructure lasts for some time. There is no way to justify the demand here for what we're seeing. And markets will have to come to their senses eventually. As we deviated here with the FANG stocks, Apple and Microsoft, past the prior highs back in December, November 2021, right, from this range, we are now seeing one of the worst candles here that we've seen during this period of time, during this entire run-up. If we don't make up some of those losses here over the next couple of days and we close potentially red, this is going to be a topping candle if I've ever seen it. And it's going to be time to finally start preparing those short positions, especially if we start to see the same repeating in Bitcoin. And especially if we see the VIX continue to bottom out here, which by the way is at the same level here we were at in January of 2020, in February 2020, right before the pandemic. And is even lower than where we were back in November and October of 2021. The complacency, the short squeeze that is going on in the market right now is crazy. That short squeeze, that momentum is starting to slow, oh so steadily. We've been in cash for a long time, guys, but I gotta be honest with you guys, I'm not feeling the FOMO of buying in, but more importantly, I'm feeling like it's time to start getting our short positions ready. We've been incredibly patient here. We've been waiting on the sidelines. I know some people again have claimed we've been shorting. We have not been shorting, right? We've not shorted Bitcoin, right? But we are getting ready here to potentially make our move, because we are keeping an eye on these fundamentals. And if I kind of use it as an analogy, there was a party going on, right? The punch bowl has tipped over, and the hangover is about to set in. I don't like to be negative, guys, but I got to be realistic with you. And yeah, we'll see how it plays out. I really wish it wasn't this way. I wish we had the legs to really kick off a new bull market, the liquidity there. But we are going through an immensely corrective period, whether it be through monetary policy, whether it be through the broader economy. And to think that the stock market can forever remain separate from that. I can't promote that message here, guys. I gotta be realistic with you. So I hope you guys understand that, and I hope, if anything, if you got some value out of this content, consider dropping a like. It means a lot, guys. But I think there are still some really cool opportunities out there. We just gotta wait for the right price. We've got to start doing our research and come prepared when it's time to go long. That's the key goal. And I'm going to be here with you guys during good and bad times. I can't wait to be the optimistic one when everyone's cynical. I can't wait to go out there and be like, yeah, I'm stacking in these positions, guys. I'm getting ready. I think we're at a fair valuation range, and we're ready to start picking up steam for the next cycle. I can't wait to be there with you guys during that period of time, and it will come eventually. But for now, I've got to be honest with you guys, stick to my guns here, and let you guys know what I'm thinking about the market. And again, if you enjoyed it, consider dropping a like. But until the next video, everyone, share the video with family or friends. Stay safe, trade smart, and I'll see you all soon. Have a wonderful weekend, everyone.